traders to another Tickmill trading update with me. I want to update the SP 500 using the Emini futures contract and identify some action areas and price objectives for the trading week ahead. Before we jump into the technical picture, let's just update where we are in terms of market narrative and market dynamic. We've obviously had Trump tariff warnings and issuing letters to various countries, specifically the and suggesting a 30% tariff on them. So being on the TV this afternoon talking about the situation with Putin and Russia and providing a 50-day window to get a deal done there to end the war. Otherwise, significant tariffs will be levied on Russia. And so the market gapped down last night, but as we have seen over the past few weeks, market is becoming somewhat less sanguine about the tariff headlines, and we have seen the market come back now to trade uh, just up on the day 0.03% as of now. So, in terms of the rest of the week and the data that we can have in play from the macro side of things, we're going to get inflation reads on Tuesday and Wednesday, jobless claims, retail sales on Thursday, and Michigan consumer sentiment on Friday, and importantly, earnings results tomorrow with the banks, the major banks in the US releasing earnings week. And also, importantly, Netflix will report on Thursday. And we will also get a early sense check in terms of semiconductors with TSMC reporting on Wednesday. And just to add an extra touch of volatility into the week, we have monthly options expiration on on Friday, and obviously we have ongoing headlines with respect to tariffs, and importantly as well, a story that is starting to get more attention is the concerns about Fed Chair Powell's security in terms of his position. There are various scenarios being looked at there with respect to potentially being replaced and sacked for cause. But we'll see how that narrative develops. But it's certainly something that you want to keep in mind in terms of the headlines, with that being a potential significant catalyst for volatility if it was removed. But that's it's not imminent. That's something to have on the radar. In terms of the flow and sector dynamics, this is my update from this morning on the Tickmill blog. And the Goldman desk note that long-only investors, net buyers last week, $5 billion worth, while hedge funds remained flat. Sector skews were generally benign, except for strong demand in tech as AI headlines continue to drive aggressive buying, and we're looking at 1.39% potential move on the week based on implied volatility. And in terms of hedge fund activity, after 8 consecutive weeks of net buying, hedge funds have modestly net sold US equities in the past week. That's for the second week in a row. We've seen stock degrossing. That's been the first time in nearly 5 months. That could just be some position squaring ahead of earnings. Obviously, we have mega cap tech coming in the next couple of weeks. I'll be sharing commentary on those earnings and giving some read on where I see opportunities developing in those single stock names. But that will follow through the blog. So turning to the technical picture, from an implied volatility perspective, we have risk to the upside 63.86. We have the weekly R1 at 63.90, and to the downside, we're looking just below the 6200 level as potential support on the week. In terms of the setup, I'm using 6220, 6230 as my weekly bull bear zone. Just talked about the range, daily range resistance today comes in at 63.58, support 62.42. The daily VWAP at the time of writing this morning was actually bearish, but it's now flipped bullish on the day. And so, as long as we get a close above 62.99 today, that will be maintained. And so, again, short term momentum is solely focused to the upside. The weekly VWAP is bullish at 60.26. In terms of the market conditions, we are one time framing up on the weekly and one time framing up on the monthly now. And the daily is obviously still trading within the balance area of 62.46 to 63.35. If we look at the specific technical setup that I'm watching now, we are looking for this consolidation to resolve ultimately to the upside, and we're looking for that test into the weekly range resistance at 63.80. So, in terms of getting into that trade, what I'm looking at is markets to take out this resistance at the 63.10, 63.15 area, see some consolidation then, certainly into the CPI tomorrow. But then ultimately, what we are looking for is that upside extension into our weekly projected range resistance. What I would say is that I will, when we trade up into that area, I will certainly be looking at an opportunity to take some tactical short positions into that 60, those late 63.80s, 63.90, 6400 being a key zone as well. And I would anticipate that we get some consolidation there that will bring us back down to take a look at this prior double top here, this 63.30s as support before then potentially building the next leg to the upside into next week. For this week, certainly, we are looking for a break of this 63.10, 63.15, some consolidation, back and fill, and then we're looking for an upside extension through this double top to take on that 6400 to the downside. If we do get some negative news in terms of tariffs, etc., then we will be targeting a move into 62.20, 62.10 being the weekly orbit zone. And again, from there, I'd be watching for bullish reversal patterns to engage on the long side with the same upside objectives in mind. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks.